Yeah. suppliers like NVIDIA and AMD.
We really have Albert in the tech board. Now that they're a tech AI infrastructure company.
Do we stereotype the people that wear Allbirds?
What, that they're all tech bros? I think we can stereotype them.
Yeah, no, I know. I was just wanting to group them. We need to put everything in a box.
Yes.
Today.
Right.
Still with us is Northstar Asset Management Chief Investment Officer Nimrit Kang. Nimrit, the AI, the story with Allbirds is pretty hilarious, but the AI story just has legs. Every day we have multi-billion-dollar deal headlines. By the way, today is Deals Day, Wednesday, so Danny's showcase off at noon. Do you continue to invest in this? Because a lot of these companies have really lost some steam. Microsoft is still down like a fifth year to date.
Yeah, I think the AI story is two different parts, right? So the market is pricing in the semiconductor stocks. That's where still the momentum is. That's where the price action has been. And the market is pricing those on the near-term cash flows. We have a pretty strong security that these companies are going to see revenue, profits, earnings, cash flows. Great. And that's what we're seeing on one side. The other side we're seeing is the taking out of the companies on the software as a service spectrum, the SaaS or PLEPs that we've been talking about. And that's you have companies like Microsoft, but also CRM, Intuit, all of those companies lagging significantly because the market is saying, we're not going to price their short-term cash flows. We're going to look out further, 20-year horizon, and maybe these companies don't exist in the same way that they do today. So two different bifurcations going on at the same time. We think that, yes, the AI is here, it's real, but now it's time for the rest of the economy to start to see the diffusion and the benefits from the AI penetration. Company after company we're seeing is implementing AI, and that's where we see the real momentum coming to bear for the AI.
Nimrit, also when it comes to AI, our team reporting this morning that Anthropic had another fundraising round at valuing it at $800 billion. OpenAI's latest fundraising round, valuing it at even more than that. It could be an IPO of something that's like $1.2 trillion. When these things list, considering that they're listing at already punchy valuations, is that something you'd buy into?
Well, one of the things is that private markets have become the valuation. Usually you used to have to wait to come to the public markets to really get that uplift in valuations. I think the story's been turned upside down. There's been so much demand, so much liquidity, money chasing in the private markets that those valuations have already reflected a lot of good. The other part of the whole story, Danny, is that let's not forget the Microsofts of the world, the Alphabets, all these companies own significant stakes in these private companies, right? So if you do it the other way around, the public market is not fully valuing the valuation that's being reflected on the private market. So my answer would be, we wait for the public markets to give you the true valuation range for these companies.
What do you see as an opportunity in terms of things that have lost value during the war, during the first half of the year? With the kind of rotation that we saw, we've been talking about the fact that in the midst of this war rally, only 200 of S&P 500 companies have been up. The breadth, is to the downside. So is there anything that you like? Are there any bargains out there?
Yeah. Well, I think I'll start with the software stocks have become the value stocks, right? And that's very attractive. And here's why.
Not private credit.
I'm sorry?
Not private credit?
No. Well, private credit, I think there's time to go. We're going to let that play out for a little bit. But on the software side, these have become real value stocks. And yes, there is a major reconfiguration that's required of business models, but the business processes are the same, Matt. Take a look at CRM. Every business still needs to capture their customer information. Back in the day, it used to happen in file cabinets. Then we came with this different types of softwares like a CRM to capture that information. Now we have AI. So different tools in the toolbox, but the business process is exactly the same. And some of these companies are going to be able to introduce more tools to capture that. I mean, doing a plug here for Bloomberg and BAsk, I used to have to do these queries using BQL, BDP. Now I just do Ask B, right? And that gives me all that information right there. So that's your way that some of these companies are going to adapt to this challenge posed by AI.
It is pretty incredible to see some of these changes, Nimrit. But just taking a step back on this overall economy, I was having a conversation with someone yesterday who works for one of the biggest real estate asset managers. He said that there actually is this level where the K-shape doesn't capture everything. This middle level, that it's not just AI, but it's the lack of visas for highly skilled workers coming into the United States that's being challenged. You're also getting less visitors coming into the US because if they know they have to spend hours speaking to a border patrol agent before they're finally allowed in, maybe they're not going to travel as much in the US. We've talked a lot about consumer stocks being challenged by lower income consumers, now adding energy on top of that. I just wonder if there's something else happening underneath the surface, if it's the really, really high part of the economy, those really high net worth individuals that are supporting us, but like everything else below it is challenged, and what that means for your investment outlook.
Absolutely, Danny. And I can vouch for that. I was at the national parks a couple of weeks back, and just it's $100 fee for if you're not a U.S. resident. So again, all these different pieces coming into play, and maybe a family of four traveling from outside of the U.S. is not going to be inclined to come and visit our national parks. But anyway, leaving that aside, I think that there's a real thing. There is the high end that's supporting, the lower end that's struggling. We have seen a lot of data points around that. But what's happening also is that there's, on the whole aggregate level, people are holding on to their jobs. It's a low hire environment, and they're barely making it, but they're still holding on to their jobs. And they are getting, Ed Yardeni talks a lot about this, how we have this huge inflow from baby boomers who are using their wealth and their resources to support the next generation who might be just barely making it with their expenses and income. So there are all these places to be. For our investment, that does mean that we want to be diversified overall because you just don't know what's happening on a day-to-day basis. But also looking for those companies that are going to continue to offer value to the consumer. That's going to remain a paramount framework for us as we navigate this very difficult market.
All right, Nimrit, we're going to have to end things there. Thank you so much for joining us on Star Asset Management Investment on Certain Right. I was going to check on your equity market right now because at the price we are currently trading at 69.86. If we close at this level, it will be an all-time high. The previous high being 69.78. What is leading us there? Not huge gains, but again, it's enough after 10 days of a rally. That would be the best 10-day rally since 2020. So we bounced back even better than we did in Liberation Day. Microsoft, Broadcom, those both leading the pack. Broadcom signing a deal with Meta to use their chips. Meta also the top of the pile. Oracle, so a lot of the AI names having a very good day. On the downside, Amazon's a little bit weaker. Chips are not doing well today for whatever reason. Lam Research, Micron, those are in the bottom of the pile, as is Caterpillar. SanDisk, again, another chip name. Looking at the individual sectors, you do have Infotech being one of the best performing, but financials doing well. We heard from Bank of America and Morgan Stanley rounding out the big bank earnings with a very strong trading revenue coming in. Materials, utilities, consumer staples, those are at the bottom of the pile. But again, Matt, at 69.87, well on our way right now to another all-time high.
69.87. Okay, that's 69.87. That's the number. 69.78.
Well, 78 was the prior record, and we're at 69.87 right now.
Yeah. Got it. We just need to get to around 7,000. Coming up, banks are reporting a stellar quarter as market volatility leads to trading revenue records, just massive records, knocking the cover off the ball at Goldman Sachs, JP Morgan, and others. Herman Chan of Bloomberg Intelligence breaks down the earnings for us next. This is Open Interest.
the phone is what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed. This gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the gaming areas, one of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing here actually that we're going to have these social party games you can play on your TV, your phone as the controller. And it's things like, recognizable games like Boggle, we got Pictionary, we got a Label Party game. We, basically are going to release those with the creators, and they're going to go figure out stuff that we didn't even imagine that they could do with that interactive.
Trading day is about to start.
You're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
On that risk, the other way, obviously there's something risk weighted. I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very still in the line. And
Blue revolutions and what?
I'm Guy Johns.
I'm Anna Edwards.
And I'm Seconds. This is your opening trade.
It's trading day only day.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherianne in Seoul, and this is Bloomberg.
Astonishing day for US technology.
Strengthening the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets, the private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policies, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
15 minutes into your trading day, let's get some top calls while the analysts are upgrading and downgrading. First, we have an upgrade from Piper Sandler. This for Cloudflare, calling it an AI winner to own and pointing to the recent pullback as a rare entry opportunity. Shares up 24%. Next up, Jefferies cuts PSEG, I guess saying that a data center deal for its nuclear plant looks unlikely as retail rules could discourage hyperscalers. The firm sees weaker rate growth from New Jersey regulations and warns that new rules could add more pressure to shares down 9/10. Finally, Wall Street is weighing on Bank of America's solid quarter. Evercore calls the results broadly better, while noting that investors may be underweight and concerned about costs. Baird is highlighting steady buybacks and significant ads.
All right, market volatility has created a massive windfall for Wall Street banks, with Bank of America, Morgan Stanley, Goldman Sachs, and JP Morgan all reporting record trading revenue. Joining us now is Bloomberg Intelligence senior banks analyst Herman Tan, and it has been, Herman, amazing to watch. The banks have made so much money. The energy companies have made so much money. This war has been very profitable for also the defense industry, I imagine.
That's right.
But what about the massive miss we saw at Goldman Sachs? I can't get over it. On FIC trading.
Right.
It was $800 million less than analysts had anticipated. I think a 10% drop compared to the same quarter last year.
Right.
Did that not show up at other banks?
It didn't show up. It seemed like that issue was more specific to Goldman. So having Goldman kick off the earnings season for the banks this time around, it sort of introduced some questions on FIC trading across the group. But I think resoundingly with the results from Morgan Stanley today, from the results of JP Morgan yesterday and Citi yesterday, that FIC trading was solid. Bank of America did post about flattish FIC trading, so I would point to them as on the mix side.
Morgan Stanley shares higher by 4.5%. Why wasn't this priced in? I mean, there's a lot of volatility. We assumed trading would be strong.
Right.
And it's not exactly a thing that they can repeat it if volatility is strong, but it's so markets dependent.
Right.
So what wasn't priced into these banking shares coming into this earnings season?
I would say there was a lot of optimism coming into the quarter. I mean, the industry was and the analyst community was expecting about mid-teen earnings growth year over year. So really, enthusiastic expectations coming in, and the banks have met that. And there's been some puts and takes, right, for the banks that I cover. Some issues on net interest margin from Wells Fargo, and some reduced expectations on NII from JP Morgan. But then on the other hand, Bank of America really offered some solid guidance on net interest income for the full year.
What have they told us about private credit? I mean, we've heard what 36 billion in exposure from Wells Fargo,
20 from Bank of America,
Bank of America,
2 from Citi.
smaller number.
Yeah.
But what about the money that they make from lending private credit and private equity companies money to do these deals? I mean, what are the fees like for these big banks?
Yeah, the fees are great. We've seen it in the investment banking numbers, but those were still fairly solid quarter over quarter and year over year as well. So there's some really strong results on the fee side of investment banking, particularly in equities and fixed income. M&A might be a bit more choppier heading into the rest of the year, but the deal backlog seemed fairly stable. So we're enthusiastic despite all the volatility that we're seeing in the macro side of things, that things can be sustainable going forward.
I also have some of the regional banks, PNC, First Horizon, among them. I know it's a sector you also closely watch, Herman.
That's right.
Did we learn anything?
Yeah, PNC's numbers were great. They talked about some higher loan growth for the rest of the year. That's been working out really well for them. They just closed the first bank deal that adds to their presence in Denver, which is expected to work well. M&T also reported today a bit mixed trends there in terms of some softer guidance for net interest income for 2026, really related to some deposit growth and some softer consumer lending.
All right, Herman, thank you very much for joining us. Herman Chan of Bloomberg Intelligence, a very busy week for him. And in the next hour, we're going to hear from Morgan Stanley's CEO, Ted Pick, right here on Open Interest at 10:30.
I believe it's actually at 10:30. I don't know why we keep saying that. I'm pretty sure it was at 10:30 we interviewed the CEO of WeWork.
Okay.
So it can't be 10:30.
That's a good point. Well, in the 10 a.m. hour, watch the whole thing, because this interview will happen. Coming up, Stellantis gets a boost from the U.S. with North American shipments jumping. Is the turnaround taking hold? That's next. This is Bloomberg Open Interest.
It won't be hard to find someone to fix.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks rallying on growing optimism. The U.S. and Iran could be looking to arrange a second round of talks, with President Trump telling Fox Business he sees the war as very close to over. The U.S. says 6 vessels turned around and re-entered an Iranian port, and Bloomberg learns Tehran is considering a pause in shipments through the Strait of Hormuz to avoid testing a U.S. blockade. And Lebanon and Israel have their first high-level talks in more than 30 years, but officials downplay hopes for an end to the war with Hezbollah. It's just gone 8 a.m. across the Emirates. I'm Shimona Bersetti in Dubai. Well, risk-on sentiment in markets prevailing. The hangover pretty strong from Asia today, and once again, on hopes of a breakthrough, on hopes of a possible diplomatic deal and another round of discussions between the U.S. and Iran at some point later this week. Lots of speculation as to where the venue is going to be. Likelihood it will be once again in Pakistan. But on the back of that, it's been enough to cheer markets to new highs. And as we were speaking about yesterday, Many of these indices, including the US index, has fully recuperated the losses that it sustained throughout the course of the war. So once again, green on the screen today, some optimism in markets. Asia Pacific up 1.3% with the handover. S&P futures, take a look at where we're at. About 7,000 this morning, a key level there, and about 7 basis points higher. And of course, they're not just focused on the geopolitics, but earnings season. We continue to get a lot of these bank earnings coming through. We'll give you a full recap of that later. But essentially, the earnings outlook actually still appears to be pretty robust in the US. So that's also one of the elements driving the performance. USD not doing a whole lot, but the last couple of days we have seen it slip a little bit on back of the risk on sentiment. And then Brent, we are lower today, $95. So down a couple of dollars since we were trading yesterday. And again, reacting to the headlines and the geopolitical news coming out of the region. But I will just emphasize that we've been saying the Strait of Hormuz still remains effectively closed. And overnight, we also had some commentary from the US CENTCOM saying that their blockade has also been successful of ships that have passed through Iranian ports. So more on that in just a moment. Before we do that, let me just show you one of the terminal charts that caught my attention today. And this is to do with all of the hedging activity around oil. And no surprise here, but you can imagine that people have been positioning themselves for an upside, further upside in oil. So been buying coal at the expense of puts. So the skew there, i.e. the price that you would pay for a similar option on the upside is a lot more expensive than it would be on the downside. And there's a risk, obviously, if we start to see oil prices and spot prices fall, that these options will be wrong-footed. So something to think about as we continue to watch the geopolitical development over here in the region. But essentially what this chart is telling you is that oil traders, at least those positioned in option space, could find themselves on the wrong side of the trade. All right, let's check in also on how markets in Asia are faring. Minmin Low is in Hong Kong for us, and Minmin, another day of green, and it seems as though tech is in the driving seat this morning.
Hey, Jemana, yes, as you said, that oil retracing to $95 a barrel, that has been adding momentum to the Asia trade here. We saw yesterday a very strong close, today a second day of gains here. The TAIEX was already at a record high yesterday, today extending gains, and the Kospi pushing above 6,100 level. And investors seem to be looking past some of the warnings from the BOK governor nominee, who is talking about increased inflation risk and slower growth. And yes, what is driving that momentum has been the Asia tech, the big names like SoftBank, SK Hynix, Samsung is really buoyed by the strong earnings we have seen in the first quarter as well. And just another signal of how investors is really looking past the war. If you take a look at this next chart, which shows you the VIX has collapsed back to pre-war levels, and so many levels have been taken out, right? Whether it's the S&P, CSI 300 is very close to pre-war levels as well. You look at commodity prices like copper also picking up to pre-war levels, and here you can see the VIX, even for the Nikkei as well, all collapsing close to normalization now.
Yeah, so interesting to track those volumes as well. And once again, it just tells you that investors seem to be looking past fully now the impacts of the Iran war, but maybe it's a little too soon. We're going to talk more about that with our guests. Now, the US and Iran are looking to arrange a second round of peace talks in the coming days, with one proposal to return to Pakistan. Bloomberg has also learned that Tehran is considering a short-term pause to shipments through the Strait of Hormuz to avoid testing a US blockade. This comes as President Trump tells Fox Business the war might be over soon.
I think it's close to over. Yeah, I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Joining me now from Istanbul is Bloomberg's Patrick Sykes, and from Singapore, Bloomberg's Wayland Soon. Patrick, I'm going to start with you. What do we know about the possibility of a second round of these talks?
Morning, yeah. So Trump has mentioned that they could resume within about 2 days in Pakistan. That, of course, was the venue of the first round of talks over the weekend. Worth saying, this would be a much faster timeline for diplomacy than we saw the last time the US and Iran met, before the war, when we were looking at a round of talks every sort of 10 to 14 days. We do also know that other venues are under consideration. So it seems that Pakistan isn't yet a done deal. We don't yet know exactly where that might be, but we did have Switzerland yesterday saying that it was prepared